and welcome to this week's look back at the major news stories that have impacted our markets. Well, where to start? Well, let's start with the oft-talked-about subject of UK inflation, and is the end in sight? Now, it's well known among big corporate and government bodies in the UK that large retail companies are experts at calculating public spending habits. They're also excellent demographers too. Want to know how many people live in a country or an area of the country? Well, the major supermarkets will know the answer to the nearest 100 people based on food consumption figures alone. So it's worthy of note this week was retail giants' next results, next listed on the London Stock Exchange, and their annual figures came out. It was a very positive set of figures, but shares were down, despite profits being up in the previous period. And why is that? Well, it pretty much comes down to a pessimistic opinion on the rest of 2023. And whilst they indicate lower rates of inflation, which the Bank of England, who obviously raised interest rates 25 basis points last week to try and combat the inflation rate, are going to be paying particular attention to Next's opinions and those of other retail giants in this country. Now, Next expects home sales to fall by 1.5% over the remainder of 2023 as a direct result of the continued cost of living crisis. Their inflation forecast says inflation will slow down, but not reverse. So it's going to continue, but hopefully not at such a high rate. Now, for the back of that, the pound remains strong versus the euro and the US dollars. And there are many investors who may view this as light at the end of the tunnel, even if this opinion has just come from Next. So is this good news for UK inflation? Well, we're going to need to see several other factors come into play. But certainly, it seems to be indicating that inflation is going to fall, albeit slightly, in the remainder of this year. So for our second story, we're going to jump across the pond over to the US and the fact that Nasdaq stormed the psychological levels near the highs of the year earlier this week. It approached the 13,000 mark. That's sort of a 2023 high and a key psychological level for the Nasdaq. It's showing noticeably stronger momentum than the S&P 500. And one of the main reasons for that is being said that investors over in the States in particular are feeling the approach of the Fed's peak rate. And when rates are lowered or slow down or reach a peak, tech stocks often outperform other stocks. I mean, there are other impacts too, obviously. Now, it's the fading of the banking crisis. With the takeovers we've seen, the government rhetoric, the shoring up of the markets, it does appear this week that fears over banking sectors in the US, the UK and Europe have eased slightly. On top of this, there is clearly a belief that the development of AI will become a major driver for growth of tech stocks. Now, that is despite Elon Musk, Steve Wozniak, and more than 1,000 other experts calling just this week for a suspension of training of AI systems due to risk to society and better security protocols. Now, despite that letter and those warnings, I think it's relatively clear that AI is going to be really important to these major tech stocks in the years ahead. If we have a little look at the chart, it's not going to be easy to overcome the 13,000 level. High volumes on the candles, that's point one, with long upper shadows indicate the presence of lots of offers. So that could indicate that we may see a little bit of range trading for a while, or possibly, or a correction. It's certainly an interesting market at the moment, the tech stocks, with an awful lot going on. As ever with any market, keep your risk management techniques fresh in your mind. Okay, now it's time to turn our attention to commodities markets and oil in particular, and the rapid recovery in oil prices. Now, since the low of March the 20th, the price of oil has increased by more than 13%. That's been facilitated by reduced fears about the global economy due to the banking crisis fading. We've already mentioned impact in other areas. So a key driver the last couple of weeks seems to be settling down slightly. There's also anticipation of what's going to happen at an OPEC Plus meeting next week. They're going to talk about production, they're obviously going to talk about supply, and they're obviously going to be talking about prices. If we take a look at the chart, we've got higher volumes and lower shadows on the candles. That's point one and point two. Now, this perhaps indicates big players being active. Maybe they're accumulating long positions in anticipation of such an increase. The Financial Times wrote that the mining companies do not hedge the risks associated with falling oil prices. Well, thus, they do not consider such a scenario in the long term. It's quite an interesting point and would seem to back up the theory that we are going to see increases. The price of the futures on the NYMEX exchange reached and in fact slightly exceeded the level of 73.7, which has previously served this year as support. So it could be quite a key area. Will we see further increases in price? We're still just below the 73-ish sort of mark at the moment, and it's not clear what's going to happen. In fact, it may be quiet over the next couple of days whilst we wait for that OPEC Plus meeting. But it's fair to say, as ever, oil, an interesting market to trade. Okay, so for our final story, we're going to finish on Bitcoin and the Bitcoin reaction to the CFTC lawsuit against Binance that was announced this week. So that's the US Commodity Futures Trading Commission, the CFTC, has filed a lawsuit on Monday against Binance, which is basically the largest crypto exchange going, and its head, Changpeng Zhao. Now, according to the regulator, Binance has been offering derivatives trading to US citizens since July 2019 without being registered. It's also informed its US VIP clients about control evasion methods and concealed true coverage and operations from the regulators. Now, according to insiders, the CFTC have lots of documents and chat transcripts confirming Changpeng's guilt, which could lead to multi-million-dollar fines and, of course, potentially the banning of Binance altogether. So what happened when this news broke? Well, the Bitcoin price, as we can see in the chart, that's point 1, fell by more than 4%. Binance users transferred almost 4,000 Bitcoins and other assets to other exchanges. But it doesn't seem to have caused the panic. We've already seen it restore those losses that it suffered, that's point 2, and in fact starting to test the trend line at point 3. Now, that does suggest some support in the market, and possibly bulls could try to get closer to the psychological level of $30,000. But the US authority are continuing to push against crypto by the looks of it. And what happens with Binance and what else they're looking at, nobody is quite sure at the moment. So as ever, cryptocurrency is a highly volatile market, in fact only available to professional clients in the UK and Australia, but it is still very, very volatile. So please do remember your risk management techniques. That's it for this week. Wish you luck with your trading in the week ahead. Bye for now.